Okay, so let's imagine this. You're out shopping for a new fridge,
All right.
and you find like an amazing deal way cheaper than you expected.
Okay.
Sounds great.
Right.
A
Awesome.
win.
Yeah.
But what if that low price is actually a sign of something much bigger happening in the economy, like something potentially troubling?
Mm.
That's the kind of counterintuitive insight we get from Marc Faber.
Yeah, it's a really fascinating way to start thinking about inflation,
Yeah.
We often think of it as just like prices going up.
Right.
But Faber argues it's something much deeper.
Okay.
It's about the expansion of the money supply,
Hmm.
often driven by, government spending exceeding revenue.
So it's not just about the price tag on that fridge.
Yeah.
It's about the forces behind it.
Exactly. And Faber points out a crucial imbalance here.
Okay.
While we might see lower prices on consumer goods, thanks to cheaper manufacturing in places like China,
Right.
asset prices, things like real estate stocks,
Yeah.
they've been soaring for decades.
Oh.
This uneven inflation, it creates winners and losers.
That makes sense because someone who owns a lot of assets would benefit in that situation.
Yeah.
While someone who mostly just buys consumer goods maybe wouldn't see the same benefit even if their everyday expenses, feel pretty stable.
Precisely. And this uneven inflation has real-world consequences.
Okay.
It can contribute to wealth inequality, even social unrest.
So we're diving into the world of Marc Faber today, a renowned investor with over 50 years of experience.
Yeah.
He's known for his bold, often contrarian views on markets and global trends.
Mm-hmm.
He's not afraid to challenge conventional wisdom, and he seems to have a knack for spotting things that other people miss.
He does. He's a Swiss investor based in Thailand, and he publishes the Gloom, Boom, and Doom report.
Wow, what a title.
It is, isn't it?
Yeah.
And it's known for its very straightforward, no-nonsense analysis.
Okay.
He's definitely someone worth listening to, even if you don't always agree with him.
Let's start with this idea of uneven inflation.
Okay.
How does Faber explain the mechanics behind it? How does government deficit spending actually lead to inflated asset prices?
Well, Faber argues that when governments spend more than they take in,
Yeah.
they often print more money to cover the difference.
Right.
And this increase in the money supply, it has to go somewhere.
Hmm.
Some of it ends up chasing consumer goods, but a large portion flows into assets like stocks and real estate.
So it's like there's more money sloshing around in the system,
Yeah.
and it's looking for a place to land.
Exactly. And because assets are seen as a store of value, that extra money tends to inflate their prices.
Okay.
Think of it like this. Imagine a small town where everyone suddenly gets a windfall of cash.
Okay.
What happens? The price of everything goes up, especially things that are in limited supply, like houses.
That's a great analogy.
Yeah.
It really helps to visualize how this works.
Yeah.
Now, the tricky part is that this asset price inflation isn't always obvious to everyone.
Right.
People might be happy that their TV is cheaper than it was 10 years ago, but they might not realize that their rent has doubled in the same period.
Yeah, that's a great point.
So how does this connect to what's happening now with rising interest rates?
Well, central banks are raising interest rates to try to combat this inflation,
Yeah.
particularly the kind we see in consumer prices.
Okay.
But this also puts pressure on those inflated asset prices.
Okay.
When interest rates go up, it becomes more expensive to borrow money, which can cool down the demand for assets like houses and stocks.
So what does all this mean for someone who's trying to navigate this complex economic landscape?
Well, that's where Faber's insights become really valuable.
Right.
He helps us understand the forces at play
Right.
and offers strategies for protecting our wealth.
So let's dig into some of those strategies.
All right.
What does Faber recommend people do, especially in light of this potential for a downturn in asset prices?
One of his key pieces of advice is to understand and manage risk.
Okay.
He compares investors to soldiers preparing for battle. You need to be mentally and financially prepared for the possibility of losses.
That sounds intense. But I guess he's trying to emphasize that investing isn't a guaranteed path to riches.
Right.
There are inherent risks involved.
Exactly. And he reminds us that unexpected events like the 2008 financial crisis or the COVID-19 pandemic
Right.
can completely disrupt markets.
Yeah.
No one can predict the future with certainty.
So how does Faber approach portfolio construction in such an uncertain environment?
He believes in diversification,
Okay.
not putting all your eggs in one basket.
Right. The classic advice.
Yeah, he recommends spreading investments across different asset classes to mitigate risk.
What does he mean by asset classes?
Sure, think of asset classes as different categories of investments, each with their own risk and return characteristics.
Okay.
Faber suggests having a portion of your portfolio in each of the following: precious metals, like gold,
Okay.
equities or stocks, real estate and cash, or bonds.
So a bit of everything, essentially.
Yes, a balanced approach is key.
Okay.
This helps cushion the blow when one asset class underperforms. For example, during periods of high inflation, gold has historically held its value well,
Hmm.
potentially offsetting losses in other parts of the portfolio.
Interesting. So it's about having different pieces that work together to provide stability and potential for growth.
Exactly. And this balanced approach also ties into another key aspect of Faber's investment philosophy, capital preservation.
Okay.
He emphasizes the importance of protecting what you have, especially during times of economic uncertainty.
This is starting to sound like a strategy for a bear market, which is something Faber has been warning about.
It is.
Can you explain what he means by that and why he thinks we might be headed in that direction?
A bear market is essentially a prolonged period of declining asset prices.
Okay.
Faber believes we might be entering one because asset prices are currently at very high valuations compared to the overall economy. Plus, rising interest rates and the potential for a global recession could further push prices down.
So if we're heading into this potential bear market, what specific actions does Faber recommend?
Well, he doesn't advocate for abandoning stocks altogether,
Okay.
but he does suggest carefully evaluating their valuations
Right.
and focusing on companies with strong fundamentals and reasonable growth prospects. Essentially, he's saying, don't just chase the hottest trends, look for quality and value.
That sounds like solid advice regardless of market conditions.
Absolutely. And he also suggests diversifying within the stock portion of your portfolio.
Yep.
Don't just focus on the U.S. market.
Right.
Look for opportunities in international markets, particularly in emerging economies.
Now, earlier you mentioned gold as a potential hedge against inflation.
Right.
Why does Faber favor gold? And how does it fit into this overall portfolio strategy?
Faber sees gold as a form of financial insurance, a way to protect your purchasing power when other assets are declining in value.
Okay.
And he emphasizes the importance of holding physical gold rather than relying on paper investments like gold ETFs or mining stocks. He believes that physical possession of gold provides the ultimate level of security and control over your assets, particularly during times of economic or political turmoil.
So it's like having a tangible safety net in a world that can feel increasingly uncertain.
Exactly. And while he acknowledges that gold doesn't generate income or dividends like some other investments,
Right.
he argues that its role as a safe haven asset outweighs these limitations, particularly during periods of heightened uncertainty.
So it's not about getting rich quick with gold.
Yeah.
It's about preserving wealth during turbulent times.
Precisely.
Okay, so we've covered equities and gold.
Yeah.
What about real estate?
Okay.
How does Faber view that asset class?
Faber sees real estate as another tangible asset that can provide stability and a sense of security,
Oh.
particularly during times of inflation. He argues that owning physical property gives you a level of control and independence that you don't get with other investments.
But isn't real estate also illiquid?
That's true.
It's not like you can easily sell a house overnight if you need cash.
Right. It's not. No, he acknowledges that real estate can be illiquid and subject to local market conditions.
Right.
He advises investors to carefully research specific markets and property types before making any investments.
So it's not just about buying any property.
No.
It's about understanding the local market dynamics
Yes.
and making strategic choices.
Precisely. And he also cautions against over-leveraging in real estate, meaning taking on too much debt.
Okay.
Excessive debt can magnify losses if property values decline.
So be smart about using leverage
Yeah.
and don't overextend yourself.
Right. And lastly, let's touch on the final piece of Faber's portfolio puzzle.
Yeah.
Cash and bonds.
Okay, some people might think cash is a drag on returns,
Yeah.
especially in an inflationary environment.
Right.
Why does Faber see it as crucial?
Faber emphasizes maintaining a cash reserve for several reasons.
Okay.
It provides a buffer to cover unexpected expenses.
Right.
And it allows you to seize investment opportunities when they arise. This could be particularly relevant in a bear market, where attractive assets might become available at discounted prices.
So cash isn't just about sitting on the sidelines.
Right.
It's about having the flexibility to act when opportunity knocks.
Exactly. And while bonds have faced headwinds in recent years due to rising interest rates,
Yeah.
he believes they can still play a role in a diversified portfolio,
Okay.
especially for investors seeking income and a lower level of volatility than equities.
What kind of bonds does he recommend?
He suggests considering bonds issued by governments with strong credit ratings
Okay.
or high-quality corporate bonds.
So essentially he's saying to prioritize safety and stability over chasing yield in a potentially risky environment.
Yes, that's a good way to put it.
This all makes a lot of sense. It's about having a well-rounded portfolio that can weather different market conditions.
Exactly. And it's about understanding the underlying economic forces at play
Right.
and making informed decisions based on your own risk tolerance and financial goals.
Faber is clearly a big proponent of independent thinking.
Yeah.
He encourages investors to challenge conventional wisdom and not blindly follow the crowd.
He believes that developing your own understanding of market dynamics
Okay.
and conducting thorough research
Yeah.
is crucial for long-term success.
Yeah.
He's not saying to ignore expert opinions,
Right.
but he's stressing the importance of thinking for yourself.
That resonates with me. It's about taking ownership of your financial future.
Yeah.
You can't just outsource your decision-making to someone else.
Absolutely. And remember, Faber's entire approach is built on this idea of being prepared for different scenarios.
Right.
He's not trying to predict the future with certainty.
Yeah.
He's saying, let's understand the potential risks and opportunities, and let's have a plan.
So we've covered a lot of ground here, from uneven inflation and the potential for a bear market to Faber's strategies for navigating these challenges. But before we delve deeper, let's take a moment to reflect on what we've learned so far.
Okay.
We'll be back in a moment to continue our deep dive into the world of Marc Faber.
Sounds good. Welcome back to our deep dive into the insights of Marc Faber.
We've been unpacking Faber's views on inflation, the potential for a bear market, and the importance of a balanced portfolio.
Right.
And it's clear he believes in being prepared and thinking for yourself.
Yes, he emphasizes personal responsibility and taking ownership of your financial future.
And one thing that really stood out to me was his emphasis on diversification. He advocates spreading investments across different asset classes to mitigate risk.
He does, and he uses a rather striking analogy comparing investors to soldiers.
Okay.
You know,
Oh, wow.
he argues that just like a soldier needs to be prepared for the possibility of death in battle,
Right.
an investor must be ready to face potential losses in the market.
Yeah, he's not sugarcoating it.
No, he doesn't mean this literally, of course, but he's stressing the need for mental fortitude and a realistic understanding of the inherent risks involved in investing.
It's a stark reminder that markets can be unpredictable and that no investment is completely risk-free.
Exactly, and he brings up the 2008 financial crisis as a prime example. Very few people predicted the scale and severity of that crisis.
It just goes to show that unexpected events can and do happen, and we need to be prepared for them.
Right, so how does Faber approach portfolio construction in such an uncertain environment? Well, as we mentioned earlier, he advocates for diversification.
Yeah, and he actually reveals his personal approach, which involves allocating 25% of his assets to each of the following: precious metals, equities, real estate, and cash or bonds.
He does. And, this balanced approach, he argues, helps to cushion the blow when one asset class underperforms.
Right.
For example, during a period of rising inflation, gold has historically performed well, potentially offsetting losses in other areas of the portfolio.
So it's about having a mix of assets that can potentially perform well under different economic conditions.
Exactly. Now, another fascinating aspect of Faber's approach is his willingness to invest in markets that many others avoid.
So he sees potential in places that might seem risky or out of favor.
Yeah. He's a true contrarian investor.
Interesting.
And this is where his independent thinking really shines.
Yeah.
He encourages investors to consider these often overlooked markets where valuations might be more attractive.
Okay.
And growth potential is significant.
It's about going against the herd mentality and looking for opportunities that others might be missing.
Exactly. But he also cautions against becoming overly reliant on expert opinions or predictions.
Okay.
No one, he argues, can predict the future with certainty.
Right.
And relying too heavily on forecasts can lead to poor investment decisions.
So it's not about blindly following someone else's advice.
No.
It's about doing your own research and developing your own understanding of market dynamics.
Precisely. He emphasizes the importance of taking ownership of your financial decisions.
And this aligns with his belief in personal responsibility, which we talked about earlier. You are ultimately responsible for your own financial well-being.
Exactly. Now let's delve a bit deeper into Faber's views on specific asset classes, starting with gold.
Okay, we touched on this before, but I'm curious to hear more about why he's such a strong advocate for gold.
Well, Faber has long been a proponent of holding gold as a hedge against inflation and a store of value.
Right, and he views gold as a form of financial insurance, a way to protect your purchasing power when other assets are declining in value. And he emphasizes the importance of holding physical gold rather than relying on paper investments like gold ETFs or mining stocks.
He does.
All right.
He believes that physical possession of gold provides the ultimate level of security and control over your assets, particularly during times of economic or political turmoil.
It's like having a tangible safety net in a world that can feel increasingly uncertain.
Precisely. And while he acknowledges that gold doesn't generate income or dividends like some other investments,
Right.
he argues that its role as a safe haven asset outweighs these limitations, particularly during periods of heightened uncertainty.
So it's not about getting rich quick with gold.
No.
It's about preserving wealth during turbulent times.
Exactly. Now shifting gears to equities. Okay.
Faber recognizes that stocks can offer significant growth potential over the long term,
Right.
but cautions against becoming overly enthusiastic during periods of exuberance, such as the market environment we've witnessed in recent years.
He's been warning about excessive valuations, particularly in the tech sector.
Yes. He suggests that these might be unsustainable and vulnerable to a correction.
So he doesn't advocate for completely abandoning stocks, but he encourages investors to carefully assess valuations and focus on companies with solid fundamentals and reasonable growth prospects.
Exactly. It's about looking beyond the hype and focusing on companies that have a strong track record and a solid future outlook.
And he also emphasizes the importance of diversification within the equity portion of your portfolio. He suggests that investors should look beyond the popular U.S. market and consider opportunities in international markets, particularly in emerging economies.
He does, so don't limit yourself to just one region or one type of stock. Spread your risk and explore different markets.
Okay, now let's talk about another key component of Faber's portfolio.
Yeah.
Real estate.
We touched on this briefly earlier, but I'd love to hear more about his perspective on real estate investing.
Faber sees real estate as a tangible asset that can provide a sense of security and stability, particularly during times of inflation.
Okay.
He argues that owning physical property offers a level of control and independence that other investments, such as stocks or bonds, cannot match.
It's the idea of having something concrete, something you can see and touch as part of your investment portfolio.
Exactly. However, he also acknowledges that real estate can be illiquid and subject to local market conditions.
Right.
He advises investors to carefully research specific markets and property types before making any investments.
So it's not just about buying any property.
No.
It's about being strategic and understanding the nuances of different real estate markets.
Precisely. And he also cautions against over-leveraging in real estate, suggesting that excessive debt can magnify losses if property values decline.
So be mindful of how much debt you take on and make sure you can comfortably manage your mortgage payments, even if interest rates rise.
Exactly. And finally, let's touch on the last piece of Faber's portfolio puzzle: cash and bonds.
Okay, we talked about the importance of cash earlier, but I'm curious to hear more about his views on bonds, especially in a rising interest rate environment.
Sure. Well, while some investors might view cash as a drag on returns,
Yeah.
Faber sees it as a crucial element of a balanced portfolio, particularly during times of uncertainty.
Right.
He emphasizes the importance of maintaining a cash reserve to cover unexpected expenses and to capitalize on investment opportunities when they arise.
So it's about having that financial flexibility and being ready to act when opportunities present themselves.
Precisely. And while he acknowledges that bonds have faced headwinds in recent years due to rising interest rates, he believes they can still play a role in a diversified portfolio, particularly for investors seeking income and a lower level of volatility than equities.
Okay. What kind of bonds does he recommend in this environment?
He suggests considering bonds issued by governments with strong credit ratings
Okay.
or high-quality corporate bonds.
So it's about prioritizing safety and stability over chasing yield in a potentially risky bond market.
Exactly. Now, having examined Faber's preferred asset classes,
Yeah.
let's explore how his contrarian approach manifests in his investment strategies.
So he's known for his willingness to invest in markets that are out of favor or that others perceive as risky.
He believes that these markets often present the most attractive opportunities for long-term investors who are willing to go against the grain.
And he actually points to his successful investments in markets like Turkey as examples of his contrarian approach in action.
He bought Turkish assets when many investors were fleeing the market due to political and economic instability.
Oh, wow.
This contrarian move proved to be highly profitable as the Turkish market subsequently rebounded.
So it's about having the courage to go against the herd and invest in assets that others might be overlooking.
Exactly. Faber's willingness to go against the crowd and invest in undervalued assets is a hallmark of his investment philosophy. He believes that by identifying these overlooked opportunities, he can achieve superior returns over the long term.
It's a reminder that sometimes the greatest opportunities lie where others fear to tread.
Now let's shift our focus to the implications of Faber's insights for the average listener.
Okay.
You might be wondering, how can I apply these ideas to my own financial life?
Right. It's a great question. And while Faber's investment strategies might seem complex, there are several key takeaways that anyone can apply to their personal finances.
Absolutely. First and foremost, Faber emphasizes the importance of financial education.
Yeah.
He believes that everyone should take the time to learn about basic financial principles such as budgeting, saving, and investing.
It's about empowering yourself with knowledge and understanding the fundamentals of personal finance.
Exactly. He argues that by acquiring this knowledge, individuals can make more informed financial decisions and avoid common pitfalls that can derail their financial well-being.
So it's not about becoming a financial expert overnight, but about taking the time to learn the basics and make informed choices.
Precisely, he also encourages people to think long-term and not get caught up in short-term market fluctuations.
Right.
He emphasizes the importance of setting financial goals and developing a plan to achieve them.
It's about having a clear vision of where you want to go financially and creating a roadmap to get there.
Exactly. And he stresses the need for patience and discipline in investing, reminding us that building wealth takes time and effort.
It's not about get-rich-quick schemes.
Right.
It's about consistent effort and a long-term perspective.
Exactly. Faber also advocates for a balanced approach to investing, suggesting that individuals should diversify their portfolios across different asset classes to mitigate risk and potentially enhance returns.
As we discussed earlier, it's about not putting all your eggs in one basket and having a mix of assets that can perform well under different market conditions.
Precisely, he believes that by spreading investments across a range of assets such as stocks, bonds, real estate, and precious metals, individuals can create a portfolio that is better equipped to weather market storms.
So it's about building a resilient portfolio that can withstand the ups and downs of the market cycle.
Exactly. And finally, he encourages people to challenge conventional wisdom and not blindly follow the crowd.
Right. This resonates with his contrarian nature.
It does.
He believes that by thinking independently and conducting thorough research, individuals can identify unique investment opportunities that others might miss.
Exactly. It's about having the courage to think differently and explore alternative perspectives.
Now, we've covered a lot of ground in this deep dive into Marc Faber's investment philosophy. We've explored his views on inflation, the potential for a bear market, and his strategies for navigating these challenges.
We have.
We've delved into his preferred asset classes and discussed how his contrarian approach can be applied to personal finance.
Right.
But before we wrap up, I want to touch on one more intriguing aspect of Faber's worldview, the role of luck.
Okay, it's something he acknowledges can play a significant role in investing both good luck and bad luck.
Right. He emphasizes that no one can control every outcome, and unexpected events can dramatically impact market performance.
He uses the example of the COVID-19 pandemic, a black swan event that no one could have predicted, to illustrate this point.
It's a reminder that even the most carefully crafted investment strategies can be disrupted by unforeseen events.
Exactly. The pandemic had a profound impact on global markets, creating both winners and losers in unpredictable ways.
It just goes to show that luck can play a significant role in investing, even for the most seasoned professionals.
It does, but Faber contends that while you can't control luck, you can control your response to it.
Okay, so he argues that a disciplined and adaptable approach is crucial for navigating unforeseen challenges.
Exactly. He suggests that investors should have a plan for different market scenarios, recognizing that things won't always go as expected.
So it's not about trying to predict the unpredictable, but about having a flexible strategy that can adapt to changing circumstances.
Precisely. He also highlights the importance of maintaining a long-term perspective and not making rash decisions based on short-term market movements, especially when driven by unexpected external events.
It's about staying focused on your long-term goals and not letting short-term noise distract you.
Exactly. Now let's consider what all this means for you, the listener, in the current market environment.
Okay.
We've seen a significant rally in asset prices in recent years, fueled by low interest rates and government stimulus.
Right. But as we've discussed, Faber believes that this rally might be unsustainable and that we could be heading into a period of correction or even a bear market.
He does. So what should you be thinking about as you navigate these potentially turbulent times?
It's a crucial question for anyone who's concerned about their financial future.
Absolutely. First and foremost, Faber emphasizes the importance of capital preservation.
Okay.
In a bear market, protecting what you have is paramount.
So it's not about chasing returns at all costs.
Right.
It's about safeguarding your wealth.
Exactly. This might involve reducing exposure to risky assets, such as high-growth tech stocks, and increasing allocations to more conservative investments like cash or gold.
Okay, so it's about adjusting your portfolio to reflect the changing market environment and reducing your risk exposure.
Exactly. He also suggests revisiting your investment goals and risk tolerance.
Okay.
Are you comfortable with the level of risk in your portfolio?
Right.
Are you prepared for the possibility of significant losses?
These are crucial questions to ask yourself, especially if you're approaching retirement or have a low tolerance for risk.
They are. It's about making sure your investment strategy aligns with your individual circumstances and financial goals.
Okay, and Faber also encourages investors to consider opportunities outside of the traditional U.S. market. He believes that emerging markets, despite their risks, might offer attractive valuations and growth potential.
He does. So it's about broadening your investment horizons and exploring opportunities in different parts of the world.
Okay, and he reminds us that a bear market, while daunting, can also create opportunities for those who are prepared. Prices often decline to attractive levels, presenting a chance to buy undervalued assets.
They do, so it's not all doom and gloom. A bear market can present opportunities for savvy investors who are ready to act.
It's about recognizing that markets are cyclical and that downturns can create opportunities for those with a long-term perspective.
Exactly. Now, as we conclude this deep dive into the insights of Marc Faber,
Okay.
I want to leave you with one of his most important observations. He contends that even if your portfolio value declines in a bear market, you might still be relatively better off if others experience steeper losses.
It's a thought-provoking concept.
It is.
It's not just about absolute returns, but also about relative performance.
Exactly. This highlights the importance of managing risk and preserving capital during turbulent times.
It's about weathering the storm and coming out stronger on the other side.
Precisely so. As we wrap up this episode, we encourage you to reflect on Faber's insights. Consider your own circumstances and develop an investment strategy that aligns with your risk tolerance and long-term objectives.
Remember, knowledge is power, and by staying informed and being prepared, you can navigate even the most challenging market conditions.
Exactly. And don't forget to subscribe to our channel for more deep dives into complex topics that can help you make sense of the world around us.
So we've been exploring Marc Faber's investment philosophy.
Yeah.
And I have to say, it's a lot to digest, from uneven inflation to this potential bear market. It's clear that Faber emphasizes being proactive and informed.
Right. He really stresses the importance of understanding the forces at play in the global economy.
Yeah.
And making decisions that are, based on your own individual circumstances.
And speaking of understanding the bigger picture, Faber has this interesting observation about the role of luck in investing.
Yeah.
He acknowledges that both good and bad luck can play a significant role and that, no one can control every outcome.
Right. He uses the COVID-19 pandemic as a prime example.
Yeah.
It was a black swan event that no one could have predicted.
Yeah.
And it had a massive impact on global markets.
It just goes to show that even the most well-thought-out plans can be disrupted by unforeseen events.
You're absolutely right. The pandemic created winners and losers in ways that no one could have anticipated.
Yeah.
And it really highlighted the inherent uncertainty that we face as investors.
So if we can't control luck, what can we control?
Well, Faber argues that we can control our response to luck, both good and bad.
Okay.
He emphasizes the importance of having a disciplined and adaptable approach.
Right.
And he suggests having a plan for different market scenarios.
Yeah.
Recognizing that things won't always go as expected.
So it's about being prepared for different possibilities, not just assuming that everything will go according to plan.
Exactly. And he also stresses the importance of maintaining a long-term perspective.
Right.
It's easy to get caught up in the day-to-day fluctuations of the market, but it's crucial to stay focused on your long-term goals.
Yeah, don't let that short-term noise distract you from your ultimate objectives.
Exactly. Now let's bring this back to the listener face. We've talked about Faber's predictions and investment strategies.
Yeah.
But how can we apply these insights to our own lives?
Right, because it can feel overwhelming to think about all these complex factors.
It can.
What are some key takeaways that listeners can actually implement?
Well, first and foremost, remember Faber's emphasis on capital preservation.
Right.
In a potential bear market, protecting what you have is crucial.
So this might involve reducing exposure to riskier assets like certain tech stocks that have had a big run-up,
Yeah.
and increasing allocations to more conservative investments like cash or gold.
It's about adjusting your portfolio to reflect the changing market environment and reducing your overall risk exposure.
He also suggests revisiting your investment goals and risk tolerance. Ask yourself, am I comfortable with the level of risk in my portfolio? Am I prepared for the possibility of losses?
Those are really important questions to consider, especially if approaching retirement or have specific financial goals that you're working towards.
Faber also encourages investors to consider opportunities outside of the traditional U.S. market. He sees potential in emerging markets despite their risks.
Yeah, so don't limit yourself to just one region. Explore different markets and consider diversifying geographically.
And remember, Faber emphasizes that a bear market, while challenging, can also create opportunities for those who are prepared.
Yay.
Prices often decline to attractive levels, presenting a chance to buy undervalued assets.
It's about recognizing that market downturns are a natural part of the cycle and that they can present buying opportunities for patient investors.
So it's not all doom and gloom.
Yeah.
It's about recognizing the potential within the challenges.
Exactly. Faber leaves us with a final thought that I think is quite powerful. He reminds us that even if your portfolio value declines in a bear market, you might still be relatively better off if others experience steeper losses.
So it's not just about absolute returns, it's also about relative performance.
Exactly, and this highlights the importance of managing risk and preserving capital during turbulent times.
It's about weathering the storm and coming out stronger on the other side.
Precisely.
Well, that's a great note to end on. I think so. As we wrap up our deep dive into Marc Faber's insights, we encourage you to reflect on what we've discussed today.
Yeah, think about your own circumstances, your risk tolerance, and your long-term goals.
And remember, knowledge is power. And by staying informed and being prepared, you can navigate even the most challenging market conditions.
Exactly. And we'll be here to help you along the way.
Thanks for joining us for this deep dive, and we hope you'll tune in again soon.
I hope so too.